Somebody on the inside knows something about Beyond Meat because they just bought nearly 6 million shares. The stock fell to 50 cents over the last few days, and I bought around 70 cents. And now it's up to $2.24 in pre-market. I made a video yesterday that it was at about 130, $1.30, and I said I see more upside because the company was growing their revenues by like 40% in 2020. Let me look at these numbers again. Yeah, 36% in 2020 they grew revenues. They grew about 14% in 2021. And then things started looking bad. So they were losing in their revenues by 10% in 2022, 18% in 2023, but then they're going back up. So in 2024 it was at negative 5% growth in revenues. So what I said was that if Beyond Meat can turn the ship around, which they're trying to do right now, they're selling their debt, right? Driving debt down, making deals with their creditors, and they're still making money. They're still making $326 million a year. That's a lot of money. And all they have to do now is continue to increase their gross margins, and eventually that'll come back into profits. So they're still, analysts are still putting them at negative 38 cents per share for their earnings on November 4th. And if they can hit that, as they've shown they can, right? They continue to hit their earnings reports. And I believe in leadership. All they have to do now is drive down their debt, continue to maintain the brand awareness and the brand strength. And as we did with Opendoor, driving it from 56 cents to over $10.50 in a few months, I think that we can do exactly the same thing and eat these shorts, right? I have my shorts right here. We're gonna eat these shorts. These shorts should not exist. Short sellers are a parasite in the market. They are an instrument of abuse. They go against companies that should exist in the market for us to invest in, and they artificially drive down their value. A company that makes $300 million in a year should not be worth a third of that if they can, of course, turn things around and get the business in a position that has less debt and is at its more stable grounds. And Beyond Meat is doing that. They've been trying to get there for the last 2 years, but these short sellers want to continue to drive down their value in the market so that we can't help the company when they need us most. Because the stock market, the whole point of the stock market is so that when companies need financing to fund their future ambitions, that public investors can go in and say, hey, I believe in you. Here's some cash. Go do what you got to do to drive this company up to produce more value for shareholders. But if the shorts go in before that and say, "Hey, we don't like this company. We're going to drive down the stock because we think that we can get a few cents here and there," because they're all they can get is 100% in returns. That's all they can get. But the upside is infinite. So why wouldn't you want to invest positively in the growth of the company? But what they do is they say, we're going to drive down this company's stock. Before anyone has a chance to save it, we're going to drive it down so that when they need some funding, when they figure out their restructuring and have a plan for the future to actually provide value to investors and to customers and to society, they won't be able to get the funds they need. And so we're going to go in, drive the stock down, and then they'll have to go bankrupt because they have no funding sources. So we're going to say no. Retail investors have been saying no, no, no. You're not going to kill Opendoor. You're not going to kill Hertz. You're not going to kill Beyond Meat. We're going to eat you guys. You want to fight? We have more numbers. There's millions of us and only a few thousands of you guys. You might have more money, but we have volume. So if you want to fight, we're here. We're going to drive the stock up from 50 cents. I didn't think it was going to go this fast. I thought we are going to get to $2 in maybe a month. But it's been like 2 days and we're already at above $2 from 50 cents. And again, I bought at around 70 cents. And then I bought yesterday at $1. We're going to drive this up from 50 cents to $5 and then $10. and continue to force them to buy back their shares. And they're going to have to buy their shares at much higher valuations than what they originally shorted it for. They're hoping that this stock continues to be driven down, and we're not going to let them do it. So if the stock price continues to go up, they have to buy that share back. They have to return their share because they borrowed the share from somebody else so that they could short it, and eventually they have to give it back. So in order to give it back, they have to buy it back from us. And we're going to say, hey, you bought it at 50 cents? Well, buy it from us at $10 per share now. Buy it from us at $50 per share. And that is going to crush them the same way that GameStop crushed the shorts and the hedge funds back in 2020. It's a whole different ball game now. So Robinhood is serving its purpose. Taking from the rich, giving to the poor. Let's eat these shorts. That's all I have to say.